behind to 81156.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings and things. Strings and things. Strings and things.
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Chloe, is that you? Still lugging that old laptop round your lectures?
No, my name's not Chloe, it's Claire. No,
No one wants to be seen with an old laptop at uni. Ask Curry's PC World about a new one, like the stylish HP Envy with its light-in design. Only $749. Plus, save £100 more when you trade in your old qualifying laptop.
Nice new laptop, Chloe. Thanks. It's Chloe, like the goddess.
Save with instant trade-in at Curry's PC World. In-store only. See website for laptop trade-in qualifying criteria and evaluation.
It's an incredible move.
Number of earnings movers to get to this morning. Campbell Soup rising after beating on the bottom line and top line. Dell up sharply, better than expected results there are helped by strong sales across its computer product line. But check out shares of Ulta. Pre-market plummeting almost 25% after posting a quarterly miss, lowering its full-year guidance, which the company says reflects headwinds in the U.S. cosmetics market. David's done a lot of work here. And I think the key question is contouring peaked?
Yes. Well, you brought that up to me. I was reading this conference call because there's not really that many people to call this morning. So I've just taken a reading Ulta's conference call. Listen, they had total sales up 12%, comp store sales 6.2%, a gross margin expanding 40 basis points, all of which is really not bad. And in fact, is pretty good in terms of continuing the growth story there. But the problem, as Sarah just alluded to, is 50% of their business and their highest margin category is cosmetics. They say they continue to drive meaningful market share growth in makeup across both mass and prestige, Sarah. But cosmetics overall in the U.S. market is challenged after several years of very strong performance. It's decelerating. In fact, right now it's gone negative. And when they talk about why, they say the main issue driving this softer cycle in cosmetics is newness and innovation that have been the focus of most brands, have not driven incremental growth. And over the last few years, they've seen this strong growth in cosmetics driven by new rituals and application techniques like contouring and brow styling. And that innovation resulted in new makeup routines, and now it just doesn't seem to be happening anymore. Why?
Well, it's a little disappointing because I'm a huge fan of the contour. You might notice that I do it every day. But seriously, this has been a trend across the cosmetics market. We've seen it out of companies like Estee Lauder and others who have done well because the growth is really in skincare and the growth is in sort of other beauty products. But as you said, Ulta's really exposed to the color cosmetics category, which I guess Mary Dillon, the CEO, is blaming on the producers, saying that they're just not innovating enough and they're not coming up with enough styles. I don't know. Mike has teenage daughters. Maybe you can.
So my window on this is the endless loops of YouTube makeup tutorials that my daughters will watch. Although I do wonder if that's maybe reached a little bit of a saturation point just in terms of certain modes and just having a very finished look. I don't know. What I do know, though, is that this stock was valued as a perpetual growth retail momentum story. Not the stock momentum, but the fundamental momentum. And how many stores can they put out there? And they had great comps, and they performed really well for a long period of time. So this is just a valuation adjustment. People saying, look, course correction here. They do not have necessarily a strong and organic growth path as we thought. It was a mid-20s forward PE multiple for a long time, and it's falling away from that.
Yeah, well, again, 50% of their business and the largest margin contributor is makeup. Both mass and prestige, which again, I think maybe we need to clarify for people what that is. But overall, these behaviors that you're talking about, even though you keep contouring.
Expensive. I keep contouring. Kim Kardashian keeps contouring, so I'm actually not a believer in the death of contouring. And they did say that KKW Beauty by Kim is coming to Ulta Beauty with more than 146 million Instagram followers. You know, Kim Kardashian, they're hoping
we'll get things going again.
Maybe the average woman out there says, look, I can't compete with Kim Kardashian and Sarah Eisen in this.
I don't know.
So
Kylie Cosmetics.
I'm not going to quit.
Kylie's a $1 billion billionaire.
Kylie Jenner,
Kylie
right?
Jenner. And that is what helped Ulta in the past.
Estee Lauder pre-open down 1%.
I'm going to figure out what contouring actually is.
You have it on you.
I do.
As we count you down to the opening bell, let's take another look at the futures. Looks like we're going for another strong day on Wall Street. Dow futures up 160. That's on top of the already pretty strong gains we have for the week. We'll be right back.
This is Kate. If it isn't dead, if it ever comes back, we'll come back to.
On September 6th,
It's me, the Losers Club has officially begun.
they're back, and so is he.
We didn't stop it. The clown.
Starring James McAvoy and Jessica Chastain.
27 years, I dreamt of you.
See how it all ends.
I craved you.
It, Chapter 2.
I missed you.
In cinemas September 6th. Book tickets now, rated 15.
Hemorrhoids. You talk to your GP, but you don't really get anywhere. Because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids, with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings and things. Strings and things. Strings and things.
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
All right, there's a look at how we're going to open at least. So 6 minutes from now, another higher open would be our third day at least. But remember, 1 week ago, very different story. Opening bell coming up.
Technology and the future of work. November 4th in San Francisco. CNBC's At Work Summit. Top CEOs and tech leaders reimagining the workplace.
I didn't choose you. You chose me. When you broke from the crowd and pawed at my knee, soon you'll be feeling right at home. You'll be a bit unsure, but you're free to roam. What's good to chew? What's nice to nibble? Wet food, dry food, tin food, kibble? You might sometimes be cheeky, not always wise, but I know I found love in those puppy dog eyes. Join the free VIP Puppy Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/puppy club or join in store. T's and C's apply.
Chloe, is that you? Still lugging that old laptop round your lectures?
No, my name's not Chloe, it's Claire.
No one wants to be seen with an old laptop at uni. Ask Curry's PC World about a new one, like the stylish HP Envy with its light-in design. Only $749. Plus, save £100 more when you trade in your old qualifying laptop.
Nice new laptop, Chloe. Thanks. It's Chloe, like the goddess.
Save with instant trade-in at Curry's PC World. In-store only. See website for laptop trading qualifying criteria and evaluation.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
See, that's funny. I thought you traded options.
I'm not really a Wall Street guy.
What's the hesitation?
It just feels too complicated, you know?
Well, share it first, but JJ can help you with that. JJ, will you break it down for this gentleman?
Hey, Ian. You know, at TD Ameritrade, we can walk you through your options trade step by step until you're comfortable.
I could be up for that.
That's taking options trading from Wall Street to Main Street.
Hey, guys, want to play some pool?
I'm not really a pool guy.
What's the hesitation?
It's just complicated.
Step-by-step options trading support from TD Ameritrade.
It can't be. I'm not ready. I do spin class. What? The refrigerator? Oh, come on. Do you know how much this cost me? This is killing me. Let me rephrase that.
When your home systems and appliances die, homeowners insurance won't cover them. Be sure your budget's protected with American Home Shield. We help cover the cost when parts of your systems and appliances die. If we can't repair them, we'll replace them, no matter their age. Limitations and exclusions apply. Home systems and appliances will eventually die. Be sure your budget's protected with American Home Shield. As America's largest home warranty provider, American Home Shield pays more home warranty claims than any other company.
Oh, the air conditioner, too?
For free information, call 1-800-996-5892. That's 1-800-996-5892. Be sure with the Shield. American Home Shield.
All right, we're going to get started with trading here. Final trading day, of course, of the week, of the month, of the summer. Bob Pisani's here at Post 9 to join us, sort of run things down. I mean, we were just talking during the break. You forget what a month it's been. If you own bonds, your returns this month have been
amazing.
Incredible.
And we've had a complete reversal this week. So I just want to point out, this is very unusual this week. The S&P is up 1.4%, but the equal weighted, all 500 equal weighted, is up 2.6%. Look at that. That is a very unusual dispersion there. 460 stocks are up this week. Only 40 are down. That's kind of weird. So this is really a broad rally. Everything is essentially up 1.5% to 3%. So why is this happening? Is there less trade tension? Is there some rebalancing from oversold? And the answer is it's maybe a little both here. So look at these cyclicals selling off. Even with this is much better than it was a week ago. These were all down double digits. Metals and mining, banks, energy, industrials, they're still down for the month, even though we had a good rally this week. What I want to point out, David, we were just talking about, the Treasury rally this month has been titanic. The 10 to 20 year up 6.5%. That TLT, I don't remember ever seeing a long-term bonds up almost 11% in the month. That is extraordinary, and that weighs in a little bit on the argument that maybe there is a little bit of rebalancing going on. So the issue is, where are you on the global growth slowdown equation? Do you believe that it's going to have a big slowdown or a little slowdown? If you believe we're going to have a big slowdown, the bears say it's going to accelerate, maybe recession. And what I care about, what's the earnings outlook? Earnings, if you're really bearish, could be flat to down 20%. And remember, in a typical recession, typical down market, you get earnings down 20%. 2008, we were down 23%. But the bulls will argue, well, wait a minute, that's unlikely outcome. The geopolitical risk will subside. We'll get some kind of truce or a deal, and earnings could be up 5 to 10%. So what do you do with this? You could drive a truck through the earnings estimates for next year, Mike. Yeah. You've got a bid ask that is remarkably wide on the earnings side, and that's
what that doesn't tell you is exactly what is priced into the market for earnings, right? We know what the estimates are. We can all look at it and say, look, it looks a little bit aggressive to say we're going to get double digits starting, by the way, in the first quarter, right? I mean, that's only a few months away. So you could say that, but then if you look at the cyclical stocks within the market that look like they've been beaten up because nobody really believes the earnings. So that's the push-pull to me. And the stock-to-bond dynamic is fascinating, and it obviously spring-loaded rebalancing, but it also shows maybe the bond market got everybody thinking too much about imminent recession.
I think the problem, what we had, and what the market is reflecting, is they don't have a lot of confidence in the earnings projections. When you've got that kind of dispersion on the opinions on the 2020 earnings number, the market's going to be all over the place, and it's reflecting that uncertainty.
Thanks, Bob. All right, you hear the applause, you hear the bell. Take a look at our real-time exchange back at headquarters, of course. Again, going to be more green on that board. Here at the big board, Boston Beer Company, celebrating the growth of its truly hard seltzer. Over at the NASDAQ, China-based Blue Hat Interactive Entertainment Technology.
It's all about hard seltzer. It combines the bubbly water and the young people getting into healthy drinks. I mean, this is where the growth is in the alcohol business.
It's not about contouring, it's about hard seltzer.
Well, we'll see. We'll see about that contouring after Kim Kardashian's line launches. We should check on Ulta. I mean, talk about how these stocks are getting re-rated off earnings. Best Buy yesterday closing down almost 10%. Ulta is going to be a huge loser today. And Mike, it was a lower sales forecast. There was a lot in there about weakness in the U.S. cosmetics market. But one question going into Ulta is where the valuation was on this stock. This has been a hyper-growth story. It's been one of the favorites. I remember Simeon Siegel of Nomura a few months ago getting a lot of grief when he downgraded Ulta and Lululemon, two of the favorites in the industry. He was a little early on that, but clearly that's coming to fruition
And
today.
the market was getting a little bit wobbly on the outlook for Ulta before. I mean, traded at 360 in mid-July, so it was already kind of on the downswing a little bit to the low 300s. And yeah, this is one of those quarters where you say, fine, if you're a growth investor, you want to essentially lower your sights for what it can do in terms of organic sales growth, mostly on the top line. So it was a category killer in some respects, and I think that it was a hot category and a good operator. And so if you're losing the tailwind in the category, that's going to have people retreat.
We do have some winners this morning. We mentioned earlier, of course, Dell and Campbell both out with earnings. Let me hit Dell because the stock is up 8.4%. Haven't talked about it that much, have we, since it really became a truly public company, of course. Roughly $36.5 billion market value. Going up today. Cash flow in the quarter was a record $3.4 billion adjusted free cash flow, driven by what they strong profitability and working capital discipline. That's what at least they're saying. Also, deferred revenue up 17% to $25.3 billion. And recurring revenue now, by the way, makes up around 20 to 25% of the revenue each quarter. As I'm sure many of our viewers know, investors typically are willing to pay a bit of a higher multiple for recurring revenue, given you conceivably can count on it. But overall, Mike, a very positive quarter from Dell this morning. And again, not a name, it's funny, I was focused on the fight, as often is the case when their shareholders are objecting to the exchange offer and everything else, but it has now been public for a while and having a good run of it.
It definitely,
today,
in like
not
this, over
the last year.
It's arguably probably still kind of undercovered, under-owned for the size of the business. There's a complexity factor here, in terms of how it became public and the various stakes involved and everything like that. So it does seem as if off a depressed price, it's sort of having this move. And I was saying last night when they reported, not the same exact business, but HPE this week too had a really bad run, really cheap stock, and you got a relief bounce once the numbers were okay when they were reported.
Yeah, they do compete with each other. Sarah, Campbell's is a company you followed closely for a long time. How was the quarter?
There's some light at the end of this tunnel. It was a 9-cent beat on the bottom line, and sales also looked pretty decent. 2% net sales, 2% organic sales, and the real bright spot there was the snacks division. Remember, they own Pepperidge Farm. Goldfish is doing well. And also they own Snyder's Lance. So that's also been a higher growth category.
Paid a big price for it, of course, under the last administration.
True,
last CEO.
And that was one of the problems financially. Yes. But they've been, spinning off businesses, trying to clean up the balance sheet. And that's why, the earnings are a little messy. But if you look at the underlying sales trends, they're improving. And here's the biggest point for investors. Soup sales are stabilizing. That was a big problem. Condensed soup, so they're investing behind this brand. It's not going to be a straight line, but I think all the commentary on the call, which is still going on under the new CEO, Mark Klaus, and the outgoing CFO, which they announced they're getting a new CFO from Chobani today, is about the stabilization and the investment that they're going to bring to the soup category. I mean, one weak spot is V8, but they're encouraged actually by the plant-based trends that are going on in the market. And so I think they're going to try to pump money into that brand as well. But overall, actually a relatively healthy set of results that, as we can see, the market is applauding, up almost 7%, showing some real signs of a turnaround.
And the stock has been performing fairly well. Of course, Dan Loeb's Third Point took a significant position, got a couple of board seats, agitated for change, was involved in the new CEO taking over there. When you talk soup stabilizing, though, I tend to, and then I go immediately to Kraft Heinz and think about their product portfolio. No stabilization there. I think it was earlier we showed it because it has been such a poor performer even this August.
Right, and it was always sort of Campbell's down with it in terms of one of the underperformers. Campbell's is making a stand here, and they're turning it around. So clearly Kraft is the one that's lagging behind. They lost their CFO recently.
That was earlier this week, I believe,
and not much, look, consumer staples have been so strong lately because they pay high dividends. We're actually seeing some signs of organic growth there. The healthy consumer, it's working. The turnaround plans, the new CEOs are making a mark on their companies. So it is stark to see a Kraft Heinz down 40% in that kind of environment. I think one of the questions for investors, Mike, as we look ahead to September is, are consumer staples going to continue to be the hot place to be?
Right, because they really have been just lifted on this tide of defensive quality stocks.
Coca-Cola, Pepsi.
Right.
These have been really strong performers.
It would be logical if you got some more certainty about the economic growth outlook that they might give some of that outperformance back. So, yeah, that is something. It didn't happen yesterday, really. I mean, the staples were flat, not down, as the rest of the market went up. I was going to point out Workday reported last night, and really only because it's a $40 billion market cap company that's been an amazing performer, really a play on a lot of this sort of enterprise software, cloud-based software dynamics that people are excited about. It's up about 0.6% right now. It's been up as much as 1%, but it's 16% off its high. So it's in this very expensive stock, great fundamental trends everyone has embraced, but it's backed off a fair bit from its highs, maybe stabilizing. They had some I guess middling guidance, but so far it seems like subscription trends up 34% year over year is enough to hold the stock in place right now at 14 times revenues or something like that. Some very high multiple.
A number of people have come back to Salesforce's quarter and said how strong it was, although it did get wrapped up in the decline late last week, I believe. And the stock has not done much, Mike, this year. Up 3% is Salesforce, which typically we've come to see as a very strong performer over years past.
And it has been, essentially, software really the strongest part of tech this year in terms of making new highs and leading the group. And Salesforce has really been sideways in that trend. It's kind of gone on its own dynamics and digesting many years of huge gains. So definitely worthwhile. Worth noting that it's making another little attempt up toward the highs.
If you look at the best performing stocks for the month of, do you know the best performing stock for the month of August?
No.
Target, up 25% for the 26% for the month. I mean, yes, they had an outstanding quarter, but it's consumer stocks. It's not just Target. Number 2 is Dollar General, up almost 20% for the month of August.
Which extended its gains yesterday after stronger than expected earnings.
So it's really the retail performers that are actually benefiting from this healthy consumer. Citigroup put out a note last night saying, well, if the U.S. consumer's in such great shape, why are the retailers going in such different directions? And the conclusion was the consumer's in better shape than the retailers, basically.
Right.
They're all dealing with their own sort of issues and secular problems. But if you're nailing it right now, that is what was rewarded during the month. It's also just striking to see. I mean, I mentioned the sort of re-rating on Ulta today, Mike, but the reactions to earnings have been so sharp, either up or down. I don't know if that's a setup because the market was at a record high or we have low interest rates.
And it just hits a raw nerve. Any worse than expected numbers, you get caught up in the macro story. Is there something bigger going on in the market? Plus, August reporting season, it gets a little bit jumpy with air pockets and stuff as well. I was going to point out just the position of the overall market. The S&P 2937. The recent high, August 8th, is 2938. I mean, this market just kind of goes up to a certain level that everyone's been watching, hangs out there for a little while. That's what it did yesterday morning as well. The high for the month, right at the beginning of August, was basically 2950. That's where, if you went above that, you say, okay, fine, August might have just been this completed pullback. Right now, you're still kind of in the zone of trying to figure out if we're just bouncing and not really making another run at the highs. And the Treasury yields are up a little bit with the 10-year at 152.
Mike, as we end August and head into the fall and September, are there any trends that we should be looking at in the past for guidance in terms of what we can expect?
If you believe the historical tendencies, September is the weakest month of the year on average. Whether it's up or down has been a coin flip in the last 90 years, basically. About 54% of the time it's been down, but on average 1%. But so it's one of those deals where
Don't you poo-poo the seasonal trends?
I do. I don't poo-poo them, meaning that they're irrelevant, but they're not the first, second, or third reason the market does what it does. So my take on it is always that the seasonal trends are climate, not weather. Right? It tells you kind of the broad tendencies. It doesn't tell you how to dress tomorrow.
And for all the talk about the strong dollar, the dollar's completely flat for the month of August. It's up a little bit, but clearly it's been up, over a 3-month time period, over a 12-month time period, headwind probably to earnings, but nothing like the moves we've seen, for instance, in the bond market or even in the equity market for the month of August. I would also point out, there's still a lot of overseas concerns. And overnight, we saw, 20 more arrests in Hong Kong. That's something that Wall Street keeps an eye on. Argentina defaulting. It just goes from bad to worse there in terms of its currency and its bond market. Not necessarily on the front burner, obviously, for U.S. investors, but I think it's part of what we have to watch.
Without a doubt. And I do know many people who are keeping a close eye. I get stories sent to me during the course of the day as well in terms of Hong Kong and whether or not China's having a military buildup on the other side of the border and what they will do and what's going to occur. But you're absolutely right. Unclear exactly what the market reaction would be, but certainly one would think it would not be a positive one should the Chinese become more forceful in asserting their will in terms of those protests.
And with that hovering out there, I just think it's one of those interesting little short-term tests for the market ahead of a 3-day weekend. Are people going to have the nerve to step up and say, fine, stocks look reasonable here, we'll be willing to buy them up 100 points on the Dow going into a 3-day weekend when you have still a lot of perceived headline risk, whether it's real headline risk or not.
And the other thing to watch is Europe and the decline of the economies there as a result of getting caught up in the trade tensions. An economy like Germany, which is so much more exposed to exports, and the Chinese slowdown, contracting is a potential real headwind for U.S. earnings. And on that front, I just wanted to point out an interesting op-ed in today's Washington Post from Tom Donahue, U.S. Chamber of Commerce, obviously the most influential U.S. business lobby in this country, who he's always walks a fine line with intervening in politics. They don't support tariffs, but they do support the president trying to negotiate a better trade deal for U.S. companies. He basically calls on the president, though, to withdraw the additional tariffs scheduled to go into effect September 1st and December 15th. Kind of a desperate last-minute call there, and to return to the negotiating table in good faith. He does give the president credit for the tax reform and the deregulatory relief, saying that causes a lot of spending from businesses, and warns that if we continue on this tariff route, we could be heading into recession because capital investment is a huge driver of the economy.
Well, Trump has fired back at him in the past. We'll see if we get any response to that at all. All right, let's get a bit more on what's moving this morning. Of course, other than Ulta, which is certainly a feature today, Kate Rogers down almost 26%.
That's right, David. Good morning. So the Nasdaq opening higher by just under 0.5% this morning, looking to end the week on a positive note, breaking a string of 4 consecutive weekly losses ahead of those new tariffs kicking in on Sunday. For the month, though, the Nasdaq Composite still down by over 3.5%. Tesla's a big mover here this morning on news that 16 of its models will be exempt from China's auto purchase tax. The company also raised prices on some of its vehicles in the country. You just mentioned Ulta, obviously a huge mover here. I love that contouring conversation you guys just had. Down by 25%. Those comp store sales lower than expected. The company also lowering its profit forecast as sales of those color cosmetics did slow down. Dell, another earnings mover here today, up more than 10%. The company reporting beats on the top and bottom line thanks to stronger sales on its computer product line. So it's also saying it's successfully handling some of those tariffs that have been imposed on some of its products. And then finally, another one we'll keep an eye on here today, Apple. That's contributed to a lot of the gains we've seen at the Nasdaq this week. It's up this morning, and it'll be one to watch, of course, heading into the weekend as these new tariffs are slated to kick in. Guys, back over to you.
Okay, thank you. Chicago PMI due out in just a few moments. Let's go to the bond picks. Rick Santelli at the CME Group in Chicago.
Thanks, Sarah. It's been a wild week with respect to interest rates. 1 week of 10-year, we're down 2 on the week, but we're actually up 2 on the day. So after the initial breaks, most of the big drops in yield happened earlier in the month. We have stabilized. We just haven't bounced very high off of the lows that we've established. And, of course, they are cycle lows. And with regard to 10-year and 30-year, they're actually very long on 30-year all time. And if you look at a July 2016 chart of 10s, you could see it was just this week that we touched a level that we haven't seen since July. Overseas, the 2-year in Europe, known as the shots, traded minus 92 basis points, as you see. And finally, if we look at what's going on in foreign exchange, I like to talk about the dollar index, which literally is sitting on 27.5-month highs. But if you look at the euro versus the dollar in this 1-week chart, you can see the breadth of the drop. Now, of course, we are expecting a big number right now, and that is our August read on Chicago PMI, expecting a number under 50. Surprise, 50.4, 50.4. Now, considering our last look was 44.4, the weakest since around Christmas of 2015, this indeed is a nice jump, but it only takes us back as far as our 54.2 read that was in May. But it really isn't about how far back you have to go. This is a very important jump in this series. back in expansion mode and will continue to monitor. We all know that there's issues related to trade that are affecting the industrial aspects of this country and many others. And of course, that continues to weigh on lots of various parts of the global economy. Sarah, back to you.
All right, Rick, thank you. Mike, this follows a better Richmond manufacturing. I mean, these survey numbers were worrisome last time around.
In fact, they were the most worrisome, really, set of data that we had. Yeah. It was a lot of the manufacturing industrial survey-based numbers. Remember, it's a survey, and we are going to get the official ISM, I guess, Tuesday, right? So that's been very widely watched. And, you know, there has been this subtle trend of better than expected economic data, both here and around the world. Better than expected, not great. So we'll see if that sort of changes perceptions a little bit of where we are in terms of growth, coming along with better personal spending numbers this morning, and then the 2% ratification of the second quarter GDP.
Also coming along with more tariffs, which are set to kick in.
Right, exactly. So the question is this relevant to the outlook? Right.
Meanwhile, negative rates just continue to get more negative, at least in terms of Germany. Who's buying this stuff, Sarah?
Well,
people who have made a ton of money buying bonds and watching their price go up. That's
price
a lot of it.
Right.
And there's people who literally have to.
Think it's just going to keep getting more negative.
Insurance companies on some level have to.
Right.
Pension funds.
There are mandates that they must own.
And if you believe, the current. By the way, there's a way to make a positive return out of it. You can swap out of dollars and into euro and you're getting paid a little bit on the currency swap if you're a U.S.-based investor. My understanding is if you buy and then you lever that up,
you get a return.
And there you go. You might actually get a bonus this year.
And then there's the people who think that Europe is heading into a deflationary, recessionary, long-term trap, and then
worth even less.
Exactly.
If you don't. All right, there you go. We got some good explanations just now on negative rates. Anyway, Mike Santoli making some calls there.
Dynamic.
Yeah.
All right, as you can see, we're opening higher here across the board. Dow up 102, S&P 500 up another 0.4%, adding to the gains for the week, looking at potentially 3% or more gains for the overall market. Another positive day on Wall Street. We will continue to track the movers for you here on Squawk on the Street. Stay with us.
By the moonlight, can't you see you're my delight?
The Bond Report is sponsored by PIMCO.
Trade boldly. Daily 3X leveraged ETFs from Direction. Before investing, carefully consider a fund's investment objectives, risk, charges, and expenses contained in the prospectus. Available at directioninvestments.com. Read it carefully.
Music that moves you. Just one part of the best cardio machine on the planet, Peloton.
We're the Nigerian brothers. John's been a professional trader for over 37 years, and Pete is one of the country's top 100 traders. On TV, we report on how we follow the smart money from Wall Street's elite, who have the massive resources to get market information before the rest of us. Their unusual option activity tells us what they're starting to trade. Our strategy uncovers why they're trading it and how to follow along for the biggest return. It works on stocks and options. It's the #1 way we choose our trades. Many of you ask, how can you do it too? So we laid out our strategy in our newest book, revealing things we've never revealed. And today we're giving some copies away for free. All you have to do is cover shipping.
Prefer video learning? Get John and Pete's new DVD for free too. Call 1-800-540-7070 or go to followthesmartmoney.com to get your free book and DVD. Call 1-800-540-7070 or go to followthesmartmoney.com now.
All the parts that you need to keep her on the road. For work, for school, everywhere you go. But sometimes they can be hard to find. Rock Auto's got the parts for whatever you drive. Keep on that work truck, you just save some big bucks. All the parts you're looking for delivered to your front door. All the parts your car will ever need. Rock Auto. All the parts your car will ever need. RockAuto.com.
Since everything's included at Beaches and Grill in Jamaica, you can do all the things you love with the ones you love. Because the best thing you can give your family on vacation is you.
Right, my generation. Yeah, we're all about a good time. Yeah, we're all about a good life. You won't believe it till you see. This is gonna be a fun ride. Yeah, we're all about
Beaches All-Inclusive Resorts, where you can feel like family again. Call 1-800-BEACHES and save up to 65%.
This view will market the property itself. We're going to get our price per night up. The kitchen's got to be top of the line.
Holy cow, guys. Wow.
Cashpad, all new, Tuesday, 10 Eastern. CNBC. Get yours.
All right, there's a look at Cisco. It has not been a good August for the company. Worst performer on the Dow. Of course, we know the best performer overall has been Target, as Sarah told us earlier. Squawk on the Street. We'll be right back.
Through the AT&T network, edge-to-edge intelligence gives you the power to see every corner of your growing business. From managing inventory to detecting and preventing threats, to scaling up your production, giving you a nice big edge over your competition. That's the power of edge-to-edge intelligence.
If something happened to you, what would happen to them? Their home, their education, their future. You need life insurance, and chances are SelectQuote can help you get it for less than $1 a day.
SelectQuote found Jacob 40, a $500,000 policy for only $19 a month. And SelectQuote found his wife Wendy a $500,000 policy for only $17 a month.
Our secret? At SelectQuote, we aggressively comparison shop up to 10 highly rated companies to find you the company with the best rates.
We found Gary, 35, a $1 million policy for only $22 a month.
Why pay more? Give your family the security they need at a price you can afford.
Call 1-800-515-1155 or go to SelectQuote.com now and get the insurance your family needs.
At a price you can afford. SelectQuote. We shop, you save.
At Credible.com, we've helped tens of thousands of people save money by refinancing their student loans. In 3 minutes, we'll get you actual rates from multiple lenders. We could save you hundreds of dollars a month.
Visit Credible.com to see how much you could save.
Thank you.
Oh, come on.
Are those your bank fees?
Yeah, first there's the overdraft, and then the maintenance fee, which I don't know what they maintain.
You should start banking with Chime. They're a mobile bank account with no hidden fees.
Banking with no hidden fees?
Yep. And I get paid up to 2 days early with direct deposit.
Wish I was banking with Chime.
It's super easy.
I like easy. Excuse me.
Start banking with Chime today at Chime.com.
When you rent a car on Turo, you're renting from a real person. No shuttle rides, no waiting in line, and no wandering a car lot. This is better than your typical car rental. This is Turo. Download the app.
U.S. markets aren't alone when it comes to having a rough August. It's been an ugly month for stocks around the globe. Seema Modi back at HQ with a breakdown. Morning, Seema.
Good morning, Sarah. That's right. Lower rates would typically be good for emerging markets, but a combination of a weaker Chinese yuan, an escalation in the U.S.-China trade dispute, and slowing growth has triggered $13.8 billion in outflows from emerging markets in the month of August, marking the worst performing month since the U.S. election in November of 2016. It serves as a reminder of the high-risk nature of investing in these developing nations. The underperformance comes as hedge funds have been increasing their exposure to emerging markets in 2019, according to HFR, with both long and short positions. Goldman Sachs analysis also shows that the MSCI Emerging Market ETF is one of the top holdings of hedge funds as of June 30th. Now, summing up where we're seeing the weakness across EM, it's broader Asia, ex-China, and Latin America, primarily due to Argentina's debt restructuring plans after postponing a key payment to the IMF. Today, credit rating agency S&P cutting the South American nation by 3 notches to CCC-, or effectively selective default. Argentina's stock market, guys, down 43% this month. Now, the broader outlook for emerging markets as we enter the final 3 months of the year, really dependent on what happens with trade and the currency market. Strategists say that if the Chinese yuan weakens further, that will make goods in South Korea, India, among other Asian nations that compete with China less attractive. Invesco is also saying that over time, investors will become more selective of specific emerging markets versus finding a basket of stocks that track emerging markets. That will probably be a strategy that they use over time. Back to you.
Seema, thank you. Seema Modi. It's a really good point. I mean, the Chinese currency down almost 4% for the month of August. That's like the worst month it's ever
Tremendous
had.
move, yeah.
You don't see moves like that in this managed currency. And whether it's a reflection of China fighting back on the trade war or China's economy weakening on the new tariffs, that is certainly up for the debate. The administration has made itself clear it's a currency manipulator. Sure. I think a big question going forward, will that continue? We have seen signs of stabilization in the last few days.
Well, coming up, keeping the rally going, we're going to have more on that upward momentum, at least so far, that we've seen for stocks.
This is Mia.
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent.
And then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent, with Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
There are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
From the moment I saw you, the last of the litter, I knew you were the one, and would soon hear the pitter-patter of tiny paws on our kitchen floor. And tiny scratches on the bedroom door. You might sometimes be mischievous, sometimes be shy, but I know I found love in those kitten cat eyes. Join the free VIP Kitten Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/kitten club or join in store. T's and C's apply.
Chloe, is that you? Still lugging that old laptop round your lectures? No, my name's not Chloe, it's Claire. No,
no one wants to be seen with an old laptop at uni. Ask Curry's PC World about a new one, like the stylish HP Envy with its lights-in design. Only $749. Plus, save £100 more when you trade in your old qualifying laptop.
Nice new laptop, Chloe. Thanks. It's Chloe, like the goddess.
Save with instant trade-in at Curry's PC World. In-store only. See website for laptop trade-in qualifying criteria and evaluation.
Silence the squawk. Find brand new cars ready to drive away today with
Squawk on the Street. I'm Sarah Eisen here with David Faber and Mike Santoli, live from Post 9 at the New York Stock Exchange. Carl Quintanilla has the morning off. Taking a look at the markets, just adding to what has already been a very strong week for stocks. S&P 500 up 1/3%. Dow's up 97. We're looking at gains across the major averages now of about 3%, limiting August losses to 1.5% down for the S&P. Not as bad as it looked before we came into today.
All right, we've got some economic data crossing the table. Let's get to Rick Santelli for that. Rick.
Yes, our final read on August for University of Michigan sentiment comes in definitely not as strong. 89.8. Our mid-month read was 92.1. So that now disappears. Sequentially, that follows 98.4. So this is a large drop at 89.8. Matter of fact, I'm going to have to go into the Wayback Machine. That is the weakest level since, oh boy, looks like about October of 2016. So not a pretty number with regard to Michigan. Let's go through the inflation aspect, shall we? 1-year inflation outlook remained constant from last month and our mid-month read at 2.7. 5 to 10 year also remained constant with the mid-month read at 2.6. Sarah, back to you.
All right, Rick, thank you. A little light there on consumer sentiment.
Let's get to our roadmap this morning. It does start with Wall Street's trade boost. Stocks are rising on cooling rhetoric as we close out a wild August. So, of course, what should investors expect ahead?
Plus, shares of Ulta Beauty plunging after an earnings miss. We'll go through the quarter next.
And here come the tariffs. A new round set to kick in Sunday. We'll take you live to America's busiest port and talk to one CEO who calls the threat to his business, quote, a nightmare.
As we wrap up the last trading day of August, Sunday's tariff deadline looms. Our next guest has a firsthand view from corporate and institutional clients navigating all this market volatility. He's the U.S. CEO of BNP Paribas, Jean-Yves Fillon, joining us here in a CNBC exclusive. Welcome.
Thank you for having me. Pleasure
welcome.
To be here.
Nice to have you.
So in honor of your appearance here, the president has just tweeted, and maybe in mine a little bit, about the currency market, saying the euro is dropping against the dollar like crazy, giving them a big export and manufacturing advantage. And if the Fed does nothing, our dollar is now the strongest in history. Sounds good, doesn't it? Except to those manufacturers that make products for sale outside of the U.S. So here are the numbers. The euro is down about 3.4% so far this year. It is down 0.8% for the month of August, and it's down about 5.3% over the last 12 months. So it's significant. He's right. The euro has been weak against the U.S. dollar. What's your vantage point as the U.S. CEO of a French bank?
Well, listen, first and foremost, this economy is very strong. GDP, employment, consumer spending still, and that's a big factor in terms of driving investors to invest here. The second factor, which is really a consequence of central bank policies across the world and in Europe, in the US, is the status of rates. You have still negative interest rates in Europe, and you have a fairly healthy, positive net margin interest rate here. Sitting bridging Europe and US, we've seen inflows of money coming in, which obviously support the dollar further, but it's more like a mechanical impact on central bank policies.
What about this view from the president that the Fed should do something about it, target the strong dollar because it is hurting our manufacturing? Would you agree with that, with the window into the economy?
I'm spending most of my days, and I love it, with US CEOs, with my clients, right? And what I can tell you is they have strong confidence in the day-to-day economy. I can see them moving. I can see them, pushing the business forward. Where there is uncertainty, it is when we speak about the medium term and the long term. You've seen a still significant trend in terms of share buyback, which I think explains a willingness, probably a safer a sentiment to return the value to shareholders versus investing long term. Then what I sense here is this uncertainty is not coming so much from the dollar or the euro. It's more coming from the uncertainty, which today is not so much driven inside domestically, but more like by global, geopolitical, political, and social tensions.
Has that increased over the last, let's call it 6 months, in terms of the CEOs you speak to here in the U.S. and their uncertainty, so to speak?
I think it has. And as you mentioned, trade has been a big factor. Let me share a live example here. I was with a U.S. CEO last week. He's leading a big, U.S. manufacturing company here. He's exporting to China. And he was explaining to me over the last, 12 months, he's seen tariff, going up and down, ranging from 15 to 40% down to 25. Impact on the P&L, managing uncertainty. In the meantime, he's importing steel, aluminum, same concept. That's what, CEOs, are trying to manage. We are spending, I can tell you, a lot of time at BNP being a lead, very house, in terms of advising, in terms of promoting hedging strategies across rates, currency, and commodities.
Well, you also have a business in the capital markets, both advising U.S. companies, but also overseas advising European companies. I'm curious, is there any demand at all for U.S. companies to try to borrow in euros overseas given the negative rates? Is that an opportunity, or is that for some reason not something that really works?
It is an opportunity in many ways, David. You're spot on. It's an opportunity first and foremost in terms of investor diversification. Quite important, when one gets into more volatile times. It's an opportunity in terms of, locking in lower rates going forward. And as the lead bank in the Eurobond, over there, we've been really, leading a lot of transactions there for large U.S. companies, but with international scope.
One of the questions as the markets now essentially price in a lot more Fed easing, or at least a couple more easing moves, is whether that would have much of an effect on these dynamics you're talking about. In other words, the cost of money seems not to be the main challenge for companies or consumers even. So would lowering rates that much more do much of anything, and do you still expect it?
Listen, I think there's a real discussion to have between lower rates and better, I would say, economic dynamic here. Listen, the only thing I can really see here is the Fed has more ammunitions today to maneuver versus, most of the rest of the world. When you live in a negative rate environment, it's true for the Eurozone, it's true for part of Asia. This is more complicated to play with. As it relates to Europe here, I believe there is a potential next step here, which is not only monetary policy, but reflecting on maybe fiscal stimulus.
What do you think, though, the ECB is going to do next?
Well, they've been signaling, and I'm looking forward to this, that by mid-September, when they come up with their updated policy, that they are really willing to provide more stimulus. Then I think the world is really waiting to see how this strategy develops.
What does it mean for the European banks? I mean, one of the cautionary tales that we hear in this country is we don't want to go to negative rates. We don't want to go to zero. It destroys the banking system. And that's what's happening in Europe, and it's what's happening in Japan.
I think your point is extremely well taken, Sarah, here. If you look at European banks versus U.S. banks, I think they've recovered from their respective crises, 2008, 2011. I think they are better capitalized, more liquid, better managed, well managed on both sides. The main difference is, one is growth. Valuation is a factor of growth for any sectors. The second one is what you just mentioned. I think, being in negative interest rate, zone, they have to, billions of deposits with central banks, that cost money. But there is another factor I would like to highlight here. This is the capital markets. The main difference between the two regions, you have a vibrant capital market here. Capital velocity is amazing. And U.S. banks have this ability to recycle their balance sheet at a faster rate, better return, and better profitability. 80% of the funding in the U.S. is coming from capital markets. In Europe, the same 80% is coming from the bank. And that's maybe, back to ECB, there is probably going to be on the agenda one day as they manage to build and establish a joint currency and common currency, maybe building a European capital market union can be a good step forward as well.
Speaking of capital markets and overall investment banking, what are your expectations for the last 4 months of this year in terms of volume, in terms of activity here in the U.S. where you operate?
We still see growth here. Our economists are forecasting another, a 2.3% GDP growth here. And overall, the Fed continuing to be on the top of it and potentially providing stimulus might probably help the business going forward. Main question mark to me, uncertainty around geopolitics, politics, and social.
Thank you for joining us. Good to see you.
Pleasure to be here. Thank you for having me.
Jean-Yves Fillon, the CEO of BNP Paribas in the America.
When we come back, shares of Ulta, well, they're just getting crushed this morning. Down even more than the last time we spoke about it. Why? Well, we'll tell you. A little bit of a hint. It has to do with this thing called contouring. First, though, a new round of China tariffs. They are set to kick in Sunday. Jane Wells is live at the Port of L.A. with a look at what's ahead. Jane.
Hi, David. Yeah, retailers are trying to beat the tariffs, and coming up, I'm going to tell you where that ship came in from where this ship came in from, and across the channel where that ship came in from when Squawk on the Street returns.
What if interest rate cuts didn't have to cut investor income? Multi-asset income. Reach for better. Franklin Templeton.
All right, we're in this together, Peloton. 3, 2, rise with me. Make every step a little stronger than the last.
Over 90 live classes every week. Just one part of the best cardio machine on the planet, Peloton.
What you don't see can hurt you. Today's connected world is full of threats you may not see if you just monitor your credit to help protect your identity. LifeLock sees more, like your personal information on the dark web. And now with the power of Norton, we detect threats like ransomware too, to help protect your identity and devices. Plus, if there's an identity theft problem, we'll work to fix it with our $1 Million Protection Package. Get LifeLock with Norton, starting at $9.99 a month.
Consumers don't just want food. They want an experience. The future of the food industry is what we now call specialty fast casual, taking individual products and doing a better job. I founded Panera. Panera was the first national chain to have a clean menu. No artificial colors, flavors, preservatives, or artificial sweeteners. Over a third of our sales are digital. Digital is a means to offer a better guest experience. This is the future of business. I watch CNBC.
This is Kate.
Hey.
She takes 2 prescriptions. Kate's son Jack takes 1 too. Kate works hard and thought she had good insurance. But she still pays too much. That's no good. So Kate downloaded the GoodRx app. Now she can compare prescription prices to find the best discounts. She even beats her insurance price. Good for you, Kate. Good for you. GoodRx. Stop paying too much for your prescriptions. Download the free app today.
I had my dream career and loads of student debt. So I went to Credible.com and in 3 minutes had actual rates from multiple lenders and I saved thousands of dollars.
Visit Credible.com to see how much you could save on your student loans.
This is Chime, a mobile bank account and debit card with no hidden fees, no overdraft or monthly maintenance fees. And I can even get my paycheck up to 2 days early with direct deposit.
Start banking with Chime today at Chime.com.
Well, the market is up. Dow's up 137. The president is fixated yet again on the Federal Reserve and criticizing it this morning. Just in, if the Fed would cut, we would have one of the biggest stock market increases in a long time. Badly run and weak companies are smartly blaming these small tariffs instead of themselves for bad management. And who can really blame them for doing that? Excuses. Well, Mike, the Fed did cut.
And that, in fact, was pretty close to where the market peaked. We've gone down since. Clearly, the market expects more cuts. Probably going to get them. Unclear if that's going to be a true offset to what the people are concerned about the economy.
What about this idea that he says that companies are blaming tariffs? I mean, in one sense,
making excuses, in other words?
For tariffs. That has been a theme this earnings season, especially among retailers and the outlooks of blaming tariffs. But the truth is, I mean, the companies will have to pay it or they will have to pass it along to their consumer.
Reading yesterday, we were talking about Dollar General, Dollar Tree, specific to, and they were talking about how to mitigate the expensive tariffs. They weren't blaming it at all.
For DG.
They were talking about how, okay, we're going to do this, this, and this to try to preserve.
The market gives credit usually when they believe that story.
Yeah, to be able to preserve kind of prices where they are. By the way, speaking of tariffs, of course, a new round is going to kick in on Sunday, which brings us to our Jane Wells. She is live from the country's busiest port. It's the front line of the China trade war. Jane.
Hey, excuses or no, companies are preparing for these tariffs. Yeah, this is really the gateway to Asia. Okay, I'm going to show you what's going on here. That ship is in from China, but this ship over here is in from Korea, and the one across the channel is in from Vietnam. So you start to see how the supply chain has changed. But we're seeing another problem here that we saw last year when the first set of tariffs hit. Retailers are so busy now trying to front load ahead of the new tariffs that we've got all these containers starting to stack up around the port, and we could have another clogging and traffic situation gumming up the mix. We had it a year ago when it happened. But right now, the vacancy rate at warehouses in Southern California is below 2%. I mean, it's really low. We could run out of room. Think, for example, like Black Friday, those TVs, those doorbuster TVs. Well, Steve Ferreira of Ocean Audit says over an 11-day period this month, 260,000 of those TVs came in here to try to beat the tariffs. And even though the president later delayed the tariffs on those TVs till December, well, the ships were already at sea. But unless something changes before Sunday, starting Sunday, 98% of the goods coming in from China will be tariffed. That is $164 billion worth of stuff. We're talking clothing, diapers, contact lenses, and I'm not kidding you on the list. Live whales from China, and I'm just quoting here, live asses. I assume they mean donkeys. But exports are down. We're still bringing stuff in. Exports are down. And the biggest growth here, guys, is in empty containers. The number of containers coming in full and leaving empty is up over 20% from a year ago. Back to you.
Well, clearly, right. They're taking less and we're taking less. I mean, we keep using those numbers, Jane, in terms of 300 billion overall, but the numbers from China keep coming down too, don't they?
Imports are up. Now, not just from China, though we are still buying, but overall imports are up as these supply chains are reconfigured. And what's fascinating is while U.S. exports to China are down double digits, they're up double digits to Malaysia, Korea, Singapore, Japan. I mean, it's pretty fascinating, Vietnam, the way things continue to undulate and change as the situation remains in flux.
All right, Jane, thank you very much. With those tariffs scheduled to take effect on Sunday, Jane Wells. Our next guest imports more than 90% of his products from China, calls the tariff threat to his business a, quote, nightmare, and the new tariffs on his products set to take hold in December. Joining us now is Jay Foreman, CEO of Basic Fun, maker of toys like Light Bright, Connects building sets, Lincoln Logs, and more. Jay, 90% of what you sell is made in China?
Yeah, that's correct. You know, there's really no production base in the U.S. anymore. Most of the toy factories that were here left in the 80s during the Reagan administration. So over the last 30 years, we've developed an incredibly efficient supply chain in China, and that's where almost everybody in the United States and in the world makes toys.
So how quickly can you get it out?
Well, I mean, I don't really think we can get it out very quickly at all. I mean, you guys do stories all the time. If you've ever seen how factories operate in India, I'm not really sure the American consumer is ready to start making toys in the kind of conditions that you might see in factories in India. And there's no labor here in the United States to manufacture toys. So it seems like the administration is really creating a problem that has no solution except raising prices on everybody and taking profits away from companies and the employees of those companies.
Yeah, I was just going to ask, if you're not diverting factories, what are you doing? You're preparing to just pass it all on to the consumer?
Well, we're not necessarily, don't necessarily have the ability to pass it on. A lot of our retail partners are telling us that we're not allowed to pass along. They won't accept price increases. And if that happens, what that means is that small and medium-sized and even large businesses all over the country are going to have to eat that tariff and not be able to pass it off. So what does that do? That means that we have less money to invest and expand. We have less money to give promotions and raises and Christmas bonus to our employees, and we have less tax dollars to pass back to the American government. So, the tariffs, as was mentioned earlier, aren't paid by China. They're paid by American businesses. Eventually, the prices will get passed along to the consumer sometime later next year. But right now, a lot of businesses are going to be suffering, and it's not just business owners. It's everybody within a company that suffers when a company's profits go down and their balance sheet goes out of balance.
You know, the president just tweeted, and I'm paraphrasing here, that you're going to blame tariffs for really what is, and I say you as in a small to medium-sized business, really what is your lack of execution. There it is, actually. You're going to blame yourself for bad management when really it's your own fault. Jay, what do you say to that?
Well, again, I say, what does the president expect us to do? He wants us to bring manufacturing of this nature, things like flip-flops, underwear, socks, toys back to the United States. At the same time, he's closing up the border. He's telling people that come from countries where low-skilled labor would be making all that product, don't come. We have maximum employment in this country. So what does he expect? He's kind of talking about out of both sides of his mouth. It's sort of like, the neighbors where there's an apple tree in between their property and they're fighting over the apples that fall on the ground. And the solution is let's cut down the apple tree so we don't have the problem anymore. And it's really ridiculous. And he's claiming we are efficient businesses. And I would say this to you. His big gripe, as much as anything, because he can't really gripe about labor and employment here because we don't have it. He's closing the border. His biggest gripe is intellectual property. Well, funny, it seems to me that Apple makes all its phones in China and its biggest store in the world is in China. So if they're really that worried about IP and companies like Microsoft and Apple and all those are worried about IP, why are they doing so much business in China? So it's really a false argument that he's making, and there's no solution to the problem that he's created.
So what do you, when you forecast for, let's call it the next half of next year, certainly after December 15th, what are your expectations in terms of overall demand for the products that you're selling here?
Well, the natural rule is when prices go up, demand goes down. Person will buy more toys at $10 or $20 than they will at 20 or 30. So individual volume will go down. Certainly as prices go up, the consumer will become more concerned and they'll tighten up. And of course, the knock-on effect of all the companies and the employees who work for all those companies, if you know your company is being attacked and its profit margins are being taken away by the government and maybe passed along to large agribusinesses, you know that it's going to be a lean Christmas. So maybe you're not buying so many toys. Maybe you're not going to buy that car. And this is not just a couple of thousand or 10,000 companies. This is the millions of employees who work for all those companies that are affected by these tariffs. It's just outrageous. We're in South Florida here right now. We're watching a hurricane come in, and this tariff situation is like looking at those spaghetti models. And every day you're wondering where the storm is going to go, where the hurricane is going to hit. How do we plan? That's what we're going through.
Jay, what's the price sensitivity of your customers to your products, do you think? In other words, have you modeled out what kind of price increases ultimately you might have to impose and whether, in fact, that really will materially impact demand?
Well, the price impact will be directly reflected by the tariffs. If it's 15 to 30% tariffs, prices will certainly go up 15 to 30% because it's a direct tax, almost like a VAT tax you would find in Europe and in Asia on the products. So the price of products will go up, and if the price of products go up 15 or 30%, if paychecks aren't going up, the president's bragging about paychecks are finally going up. That's great. All the money that people are making from getting a little bit more money in their pay packet is going to go to more higher prices on the shelves. So, there's a direct correlation on the increase of pricing, and as prices go up, consumers will spend less. There's no doubt about it. I think prices will go up on all the goods imported from China. That's not just toys. That's phones and tableware, sneakers, blue jeans, you name it. And they'll go up 15 to 30% in the second half of next year. No doubt about it. It's got to go somewhere.
Is there any hope for you moving your supply chain, getting out of China? I mean, I know the toy industry is China, as you said earlier, but can't you just think about getting out of there?
Well, we can, but think about it this way. Mr. Trump is the great deal maker. Eventually, the assumption is he's going to make a deal. So we start to move our supply chain to places like Vietnam and India, and then all of a sudden he makes a deal. And we've got our supply chain on the move, and all of a sudden now India is the enemy, and Vietnam is the target. So again, without a rationalization in this trade policy, there's really no way to plan. So I can move my production, but think about Vietnam. Vietnam is a tenth the size of China. If you moved 5% of the production out of China into Vietnam, Vietnam would be maxed out in a year. And they would not want to necessarily be making flip-flops and teddy bears. They want to be making telephones and cars and consumer electronic products. So then we'd be squeezed again. We have to move to India. And the president has already, talked here and there on the edges about India and trade with India. So as soon as that happens and we start to move, he's going to put a target on somebody else's back, and where do we go from there?
Jay Foreman, thank you for joining us.
Thank you. Thanks for covering the story.
of basic fun toys.
When we come back, two earnings movers going in opposite directions. We'll discuss their quarters next. And as we head to a break, take a listen at what some industry leaders think those looming tariffs will mean.
What's happening globally is a confidence effect on business confidence, not just in the U.S. and China, but all across those supply chains.
We do plan on passing costs on to the U.S. consumer, but we're taking a wait-and-see approach, and we think that's the prudent approach because we're seeing changes happen via tweet.
We will be raising prices on products to accommodate the tariff.
The biggest impact it would have would be on the machine. So we've been thinking about this for a while. We've diversified our supply base. So it used to be almost exclusively out of China. Now we've spread our distribution, our sourcing out of China. But if it were to hit in September, as it's scheduled to, it's going to have a short-term financial impact on us.
So we can effectively pass on those costs. Ultimately, those costs will be borne by the consumer over time.
Most of the people believe that the China situation, which is very difficult, is going to take a lot longer than people think to resolve fully. It may not get worse. It may get better. There may be debates about what's going on, and you hear it every day. But the reality is it may take a long time.
When my business started offering online purchases,
there are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should. Because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Live big and spend less on the brands you adore, and dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way, and give yourself a different day. At Gunwharf Keys, waterfront outlet shopping.
Strength and things, strength and things, strength and things, strength and things, strings and things and strings, strings, strings and things, strings, strings, strings and things, strings, strings, strings and things, strings and...
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
From the moment I saw you, the last of the litter, I knew you were the one, and we'd soon hear the pitter-patter of tiny paws on our kitchen floor, and tiny scratches on the bedroom door. You might sometimes be mischievous, sometimes be shy, but I know I found love in those kitten cat eyes. Join the free VIP Kitten Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/kitten club or join in store. T's and C's apply.
Chloe, is that you? Still lugging that old laptop round your lectures? No, my name's not Chloe, it's Claire.
No one wants to be seen with an old laptop at uni. Ask Curry's PC World about a new one, like the stylish HP Envy with its light-in design. Only $749. Plus, save £100 more when you trade in your old qualifying laptop.
Nice new laptop, Chloe. Thanks. It's Chloe, like the goddess.
Save with instant trade-in at Curry's PC World. In-store only. See website for laptop trading qualifying criteria and evaluation.
Some earnings movers to hit for you this morning. Check out shares of Campbell's Soup up 9.3%, beating analyst expectations, helped by strong organic revenue. The stock up more than 40% now for the year, guys, trading at levels not seen since February 2018. The turnaround plan under Mark Klaus, the relatively new CEO, is taking shape, and especially those sales trends are what drove the quarter and what drove the better expectations. 4% organic sales in snacks, thanks to Pepperidge Farm cookies and Goldfish and also Snyder's Lance. And also the meals and beverages segment stabilizing with organic revenue growth up 1%, especially soup sales, which are starting to come back. Klaus talking on the call this morning saying there's a lot of innovation we still have to do within soup. It hasn't really been the driver, but we've been working with retailers, relaunched the convenience store sales, and that has helped some of the soup sales. Prego they own, Pacific Foods they own. It's not broth that's really doing well. It's some of those meal type soups, in case you were wondering.
I mean, I look at that 43% this year and remember that when it was having its real problems, there were plenty of shareholders be like, please sell it at, a 10% premium. 15% premium. They're very thankful now that they waited around.
It is true. It still has remained a pretty heavily shorted stock. People just think that there was not a real way out business-wise from it. 13% or so of the float was short in the latest report, which is substantial for an old line company. Yes, there's some debt, but it's not as if it was an unknown kind of smoking gun type.
Well, they still have a lot to prove.
Absolutely.
I mean, this is not a runaway growth story by any means. However, there are some signs of hope in these numbers. And also, Campbell has done well spinning off and getting rid of some of its businesses, really streamlining its whole business, which was the strategic plan announced last year in order to satisfy.
Frozen carrot with the carrots and all that stuff.
Yeah, they got rid of the fresh business.
Yeah.
And they found buyers.
It was 67 3 years ago, right? So just to put it into context, it's now climbed 40-something% this year to 47. So.
Right. It had underperformed for a while. On the opposite end of the spectrum this morning, shares of Ulta Beauty plunging after an earnings miss. The cosmetics retailer also slashing its outlook for the fiscal year. CEO Mary Dillon citing industry-wide headwinds, saying, quote, it's clear that the cosmetics in the overall U.S. market is challenged. The stock losing most of its gain at this point for the year. It was, Mike, a high-valued stock, one of those momentum best in show comp store sales when it comes to retail. So that could have to do with the exaggerated effect on the stock. But it was a disappointing quarter. And she did talk about, as David noted, the fact that color cosmetics aren't innovating or producing enough style trends a la Contour, which was so huge. We made a joke about Contour, but actually that came up in the call.
No, it did. Listen, the makeup category has been decelerating over the last 2 years, but recently turned negative, she said on the conference call. And this does represent roughly 50% of their overall business and is one of their highest margin categories, Sarah. So it's very significant for them. And apparently some of these new innovations and trends, the behaviors are changing. That's where I lose track of the story.
Well, you have to go on YouTube. You have to watch the demo videos from all the makeup influencers. You got to watch the Kardashians. They are set to launch the new
So what happened? People aren't watching them as much anymore? The trend is sort of stabilized, if not sort of...
Well, people are very into skincare. Masks, I think, are really hot right now. This is totally anecdotal.
Yep. No, my 14-year-old, she wears masks all the time.
Yes, and that's a high-margin product for an Estee Lauder, which is why they've been doing relatively well despite the change.
And by the way, Estee Lauder shares down 1.7% in an up market. It's been an amazingly strong performer. It's up more than 50% year to date. It's been hitting record highs. However, if there's a little bit of concern about the overall category, it's getting skimmed off the top of that.
You heard it here first. Masks are the new Contour.
Masks are the new Contour. Okay, I'll pay closer attention to what's going on in my household.
Yes, you should.
It's a good policy in general. Now let's send it over to Rahel Solomon for a CNBC News update at this hour. Hi, Rahel.
Not necessarily.
Hi, Mike. Good morning. So here's what's happening at this hour. Dorian is now a Category 2 hurricane. It is expected to strengthen over the weekend as it heads towards the east coast of Florida. It's expected to make landfall Monday night. The National Hurricane Center says the storm currently has maximum sustained winds of 105 miles per hour. A New York City teenager has been arrested after telling undercover agents his desire to conduct a violent attack in the name of ISIS. 19-year-old Awas Choudhury was picked up Thursday evening. He's expected to face a judge later today to face terror-related charges. Hong Kong police have arrested pro-democracy activists in a mounting crackdown on people involved in this summer's protests. Joshua Wong, Agnes Chow, and Andy Chan have all been taken into custody. Officials also denied permission for a major march that was planned for tomorrow. Organizers said they were calling off the march. And Ford is recalling more than 550,000 trucks and SUVs in North America. This is because seatbacks may not properly restrain people in a crash. This recall covers in part certain 2018 through 2020 F-150 pickups and 2019 to 2020 Explorer SUVs. And that is our CNBC News update at this hour. David, I'll send it back to you.
Okay, and I will take it. Thank you. When we come back, stocks are still up this morning, but they are on pace for what would be the second negative month of the year. So what should you be doing and expecting for September? We'll fill you in next when Squawk on the Street comes back.
Through the AT&T network, there are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings and things. Strings and things. Strings and things.
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
From the moment I saw you, the last of the litter, I knew you were the one, and would soon hear the pitter-patter of tiny paws on our kitchen floor, and tiny scratches on the bedroom door. You might sometimes be mischievous, sometimes be shy, but I know I found love in those kitten cat eyes. Join the free VIP Kitten Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/kitten club or join in store. T's and C's apply.
Chloe, is that you? Still lugging that old laptop round your lectures? No, my name's not Chloe, it's Claire. No,
No one wants to be seen with an old laptop at uni. Ask Curry's PC World about a new one, like the stylish HP Envy with its light-in design. Only $749. Plus, save £100 more when you trade in your old qualifying laptop.
Nice new laptop, Chloe. Thanks. It's Chloe, like the goddess.
Save with instant trade-in at Curry's PC World. In-store only. See website for laptop trading qualifying criteria and evaluation.
It is the last trading day of August, and the market is continuing to climb back from mid-month lows. Still, August is on pace to close as the second negative month of 2019. Joining us now is DWS Group Head of Fixed Income Gregory Staples and Butcher Joseph Asset Management Chief Investment Strategist Nancy Tangler. Morning to you both. Greg, start with you just to get, I guess, a vantage point from the macro picture here on the fixed income side. Bonds have been front and center. We're concerned about how low yields are, the structure of the yield curve, all the rest of it. What is it telling us in terms of the economic outlook? Have bonds overdone it on the downside in terms of yield, or do you think it makes sense here?
I think for the short term, they've overdone it. We've gone over 150 basis points in the past year, 50 basis points in August alone.
In the 10-year Treasury.
In the 10-year Treasury, that's right. And I think you can justify it in some sort of a long-term secular decline in interest rates. We've been going down in interest rates for 30 years now, and this is just another leg down. But I think given in August, a little bit too much too soon.
And does that mean that this yield curve signal that we're fixating on is not relevant, is premature, is distorted, or should we worry?
You're talking about the inversion of the yield curve, the short end at 10s, and I'd say I think it's been a little bit overhyped at this point. When my 84-year-old mother-in-law asks me, "Oh, we're going into a recession because I've heard something about a yield curve inversion," a little bit too much. We don't ignore it, but we think perhaps this time it's a little bit different spillover from what's going on in the ECB in their quantitative easing. And, the long-term liquidity premium that the New York Fed talks about, maybe there's just an acceptance of longer-term interest rates are going to be lower and people want to get in front of that.
Meanwhile, if your mother-in-law looks at her portfolio, though, and has a lot of bonds in it for the last month, she's done awfully well.
She's done pretty well,
Do you position more defensively now?
Position more defensively, I think, in fixed income, but also in equities that are bond-like equities. Think about REITs, think about consumer staples, think about utilities, those that throw off a decent dividend.
You don't worry about the high valuations there on some of those groups, especially utilities?
Everything's high valued. Yes, absolutely, positively, but when you pull out an individual asset class and say, gosh, things are a little inflated here, show me an asset class that's not.
Nancy, you look for things that aren't so highly valued. Typically, you look across the stock market right now. Obviously, some parts of this market have gotten beaten up more than others in this August downturn and now the recovery. So what have you been finding by way of value at this point?
Hi, Mike. Listen, we have just been adding modestly and actually been more oriented towards trimming back some of our larger holdings. But I think this is an interesting time to continue to add to software because CEOs are still spending on the cloud and software applications. We have been picking away at Broadcom, and usually, when I'm talking about a stock, it takes us a year to build a full position. We started about a year ago, so we're still adding to that. And I'm taking a fresh look at Federal Express. I mean, that stock has just been pummeled. We own it. I think it's overdone at this point, and I think there's an opportunity to view this stock like we did American Express during the Costco transition as a company that is moving away from Amazon and trying to increase margins by working with some of Amazon's competitors.
So as you look at these companies, as you model out what they're going to earn next year, is your premise that the economy remains in okay shape, or do you think on the other side of it that maybe FedEx, in terms of its valuation, has already priced in recession risk?
Well, I think you could argue it has, and certainly it's been punished by the trade rhetoric and by the Chinese government. But yeah, we have said that we think that the yield curve inversion is overdone. That the real important thing is to watch the 30-year into a negative sloping environment. I'm going to be watching the PMIs, the non-manufacturing ISM PMI and the manufacturing next week. I think that's super important to CEO confidence and spending. And then I actually thought the consumer numbers today were maybe a shot in the across the bow to the administration. This may not be playing as well in Middle America, this trade war, as the president had thought.
The consumer sentiment declined. Yeah, absolutely.
Yes.
University of Michigan.
Greg, do you need to start moving down the risk curve, so to speak, to find yield? I would think you have to. Or do we start to see a lot more focus on?
Unfortunately, I think if you're going to try and get more yield, you have to move out the risk curve, particularly
that's what I meant.
in fixed income, meaning you go from single A to triple B to high yield. No, but this is not the time to do that. I think this is the time to pull in risk a little bit.
Why?
Well, because I do worry if we do get an economic slowdown, you're talking about the lower quality bank loans, the more weak high yield names might suffer a little bit. We haven't had the kind of sell-off that we had in the fourth quarter of 2018, but we're potentially vulnerable as we go deeper into 2019.
Finally, I can't ignore what's happening with oil today and really for the month of August, Nancy. Today, it's down 2.6%, worst daily performance since August 14th. For the month, down 6%. And if you look at the stocks, they did even worse. It's the only group that's actually lower for the year and with a worse performer again in the month of August. Is there opportunity there?
I mean, that has been a difficult place to be for 3 years. We were in 2016 when oil got to $24, $26 a barrel. That was a good move for about 9 months, but we didn't get out, entirely out. And so we've been overweight the group. And about 3 months ago, we started taking our exposure down just on the concerns that that global growth was slowing and that oil at the margin may be more cyclical than it's been over my investing career due to alternative fuel sources. So we're in the big integrateds and actually only in one of them, and that's Chevron. We got out of ExxonMobil, and then we have one in each of our strategies. We have one risk-oriented oil stock, but we're now market-weighted and not overweight. And I may be dead wrong on this because normally my instinct would be to buy more. But I've just been watching this for decades, and this one feels a little bit squirrely to me, this cycle.
Yeah, the market is definitely acting like there's something bigger happening than just a cyclical downturn with that sector. Nancy, thank you very much, Nancy and Greg. Appreciate it.
Thank you.
Thank you.
So despite today's rally, global growth concerns still very much in focus, with President Trump tweeting about Chinese manufacturing earlier. Our Steve Leisman joins us now on the ripple effects of the global slowdown. Steve.
Yes, Sarah, thanks. As the Fed worries about global economic weakness, it's finding out just how connected the world is. The data the Fed is looking at suggests weakness overseas having important effects over here and happening already. Take a look at these key gauges of manufacturing in China and the U.S. They've both fallen together. The U.S. PMI fallen from 60 to around 52. Below 50 is contracting. Along with it, China's manufacturing index has dropped from just below 52 to now into contraction territory around 49. Joined at the hip, that chart looks like to me. What's also happening is it also affects what's happening in Germany as well. Overall, Chinese imports are down year over year. That started in December. A few months before that, overall exports from Germany, they went negative, suggesting a strong German-Chinese trade and economic connection. So anything that weakens China can hurt Germany. Germany's weakness, that's in turn a big part of Europe's weakness. All of this washes up on U.S. shores, and it shows up, among other places, in our export data. Yesterday, second quarter GDP data showed that U.S. exports, they almost always add to growth. They subtracted 0.7 of a point from growth. In fact, this year, this year they saw the two biggest export subtractions from growth in a quarter since the Great Recession. That is in the last 4 quarters. The good news, The U.S. has held up remarkably well thanks to the consumer. We got some of that spending number this morning. U.S. still growing at 2%, but the links are there. And if other economies worsen, Sarah, in what is still a globalized world, the U.S. is not going to be immune.
Yeah, I mean, my other question is, Steve, this is why we've seen central banks spring to action in so many different countries around the world. And I just wonder if they can stave off a global recession and whether they still have the ammunition and the efficacy to do anything about this issue.
I think that's a really good question. I think we're going to find out. I mean, next month, when we get back from the holiday, we'll be talking about central banks. We have the ECB, Japan, and the Fed meeting next month, and that's September. So we might get some easing from all three here. Certainly, the Europeans are talking about it. It's priced into the United States, and we'll see if that takes some of the edge off it. It's a little scary, though, Sarah, to look at that U.S.-China PMI chart and see how closely they they move together. And we don't really know which way the flow goes. Is the U.S. Down because China's down? Is China down because the U.S. is down? And how much all of this relates to tariffs and the effects of tariffs, possibly weakening Germany because the idea that China is down, which weakens Europe, which weakens the U.S. That's the way the world works.
Yeah, which weakens South Korea, which weakens Japan. I mean, all of them are exporting and importing so much.
We may want to deglobalize, but that is not true yet.
Steve, thanks.
Pleasure.
As we head to break, take a look at shares of Tesla having a good day after China's automotive regulatory body declared that it will exempt Tesla from its purchase tax. That stock's still down 30% or so for the year. More Squawk on the Street when we come back. Dow's losing some of its steam here, up 87 points.
What do you look for when you trade?
Hemorrhoids. You talk to your GP, but you don't really get anywhere. Because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids, with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Live big and spend less on the brands you adore and dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and...
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Could there be danger lurking beneath this rebound rally? One technician says the chart suggests trouble ahead. Find out more on tradingnation.cnbc.com. More Squawk on the Street is coming up.
So, Schwab, tell me about...
I didn't choose you. You chose me. When you broke from the crowd and pawed at my knee, soon you'll be feeling right at home. You'll be a bit unsure.